the market increase at year end? Let's find out in today's video. Let's go. So guys, as you know, we also periodically use the knowledge that's available on the DEGIRO's website.
Nice.
And when you go to knowledge blog, then this is one of the blogs that came out just a couple of days ago, which is related to the Santa Claus rally that might be on its way. Let's hope it is on its way. So let's quickly scan through this little article and see what we can expect in these last couple of weeks prior to Christmas. So what are they saying here? They're saying, well, a year-end rally, that would be really nice. History shows that this might happen based on the Santa Claus rally phenomenon. So what is a Santa Claus rally, and will we see one this year? Here it's saying something about that the last 5 trading days of the year, as well as the first 2 days of the new year, are, historically speaking, at least, a very strong period for the stock market. The term was actually coined in 1972. Okay, that's all nice. And observed that the S&P 500 gained an average of 1.5% during this 7-day period between 1950 and 1971. Which is actually quite insane, I must say. 1.5% in a 7-day period. That's actually quite a lot, I must say. And then zooming in on the past 5 years, the S&P 500, Dow and Nasdaq Composite all recorded gains in the Santa Claus rally period, except for the Nasdaq Composite in 2021-2022. And here they've made this lovely little table. So this is saying something on these days, so on those specific 7 days, between 2018 and then 2018-2019, and then so every time it's the year-end period. And then the S&P 500 gained 1.1%, 1.2%, 1.3, I'm sorry, 0.3%, then 1.0 and 1.4%. So it's actually quite significant to see that so much money can be made in just a couple of days, guys. That's quite insane. And then let's see what they're writing here. He famously said, if Santa Claus should fail to call, bears may come to Broad Wall, which is actually quite funny, right? So there might indeed be a bear market. Who knows? Who knows? No, I think in this case might be a bull period, right? And of course, it's always important that you do your own research. So please, although this is the data says something, right? And that's, I think, the most important, the most important thing that we actually wanted to show you was this little table, which is the data that supports really an increase in the market price of these specific indexes. But of course, you need to do your own research. And if you, by the way, like these types of shorter videos, or you just want to vent and share a little bit of our thought process here as well with you, then please give this video a thumbs up and also subscribe if you haven't done so already. Investors often buy stocks ahead of an anticipated rally in January, known as the January effect. So these are a couple of reasons, by the way, what causes a Santa Claus rally. The holiday spirit fuels optimism during this time of the year, which I must feel as well, I must say. End of year bonuses or gifted holiday money give people money to invest, which I must say also happened to me as well. So indeed, I do have a little bit of cash to spare, which, yeah, for sure we're going to be investing in our inside investing account as well. During this time, institutional investors are on vacation, giving more influence to retail investors who tend to be more bullish. And the tax year ends on December 31st, so some people may rush to complete trades beforehand. So these are a couple of reasons what might cause a Santa Claus rally. And then here they're saying, will we see? Well, it has boosted the S&P 500 by an average of 1.3% since 1969. But of course, there's no guarantee, guys. That's, I think, sort of the default message, right? The results of the past don't say anything for the potential in the future, right? So, okay, this might have happened in the last couple of years, but you never know. The S&P 500 is down from the beginning of the year, but is on track to have the best fourth quarter since 1999. the recent rally has been sparked by hopes of a slowdown in inflation and that the biggest interest rate hikes are behind us. So those are as well a couple of reasons why we might actually see a little bit more of those positive growths here as well. As we see the Fed and the ECB slow the pace of interest rates. That's indeed true. So the interest rates are not increasing that much anymore. And then the ECB also announced a 50 basis point increase, a smaller hike than the last. However, there will be more to come next year as well. We should and that's when what the ECB president says. We should expect to raise rates at a 50 basis point pace for a period of time. And then also the stocks fell after this message as well. While investors responded negatively to the recent interest rate increases and forecasts for future hikes, stocks could still rally at the end of the year and into 2023.